Hey traders, we're back to cover Friday, October 17. That's this little green up candle. A lot of back and forth as we anticipated in the middle of this down candle from last Friday. And here are the levels that were put out in the morning before the opening bell. Not very many, and they were spread apart. You can see that 660.63 is a different color. That's explained at the bottom of these notes. And the game plan here essentially talks about the big picture, what they've been doing inside that drop down candle from last Friday. That was October 10. So both scenarios, the bull perspective and the bearish perspective. So what it basically means, or what it meant that morning, Friday morning, is that price is in the middle of stuff. So you can read this last paragraph here because it explains 660.63. That was the close left over from the previous day. That was Thursday. So essentially it was the axis level for the day, or at least for the morning, to see if the bulls can stay on top or if the bears would get below and close below. As was explained earlier, could probably mean lower prices in the bigger picture, but they were close to kind of a line in the sand here. It's kind of a triangle consolidation they could bounce from. You can read through these notes. That axis level at 660.63 wasn't something I was willing to trade against. Essentially, it was just the gauge. And this is just a screenshot of the 1 minute chart with the levels plotted before the opening bell. So that axis level was the only level hit. They didn't get up high enough to hit this level. The next one up was 666.82, and down here didn't get close to it. This area down here was important, as was this area up here. And there were some zones that I identified in real time, which we'll see and look at in the recording of my trading activity, or lack thereof. But I just want to point out what was happening. If you did give the market 15 minutes to settle in, 9:45, they were way down here, flirting with this line in the sand. So they came up pretty close, the 2 pennies away, 660.61. Now, if you adjusted this with a 5-cent buffer, you would have been filled there, assuming you were willing to trust that level. And they pulled down more than enough for a base hit, more than 4 points. That little quick move there, then they got above it. And a lot of this back and forth is really not the kind of thing that I want to see. Makes it more difficult to trade because you don't know at what point they're going to launch from an area or get below it and stay below. That's the purpose of what I call an axis level, just kind of a gauge. So it took them some time to get settled in. And once they got above this level and stayed above it, then the afternoon seemed relatively bullish. Here is the recording of the market starting at 9:30 in the morning. And I have some notes. What I think I'll do is pause at each timestamp. The first one was 9:55 a.m. And I'll just explain my thought process in the moment, because I took notes as time was progressing. So here we go, 9:55. My note said I was looking to scale into a short position up at a zone that I identified in real time, 662.88 to 663.30. Obviously, they were not levels from the morning, but they started to look promising at this point, the way price was coming up there. And then price got rejected almost exactly 40 cents from the bottom of that zone. That's that 40 cents that we see time and time again. So I decided not to trade it if they were to get up there again. So essentially, I was looking to see, could the bulls stay above this and get some closes? We'll go ahead and pause this one more time, about 10:18. So at 10:15 a.m., I had some notes. I said, zone hit, decided not to trade against it, waiting to see if they'll react on this second attempt. I'd rather not get caught in a short trade if the bulls are trying to regain lost ground by getting on top of this zone and staying on top of it. If the zone works out to be good overhead resistance, I'll just be content knowing that I was right about it, but I'm also okay with being conservative by staying away from it, just in case the bulls tried to launch from it. And about 3 minutes later, 10:18, 10:20 or so, they were below it, and that would have given the base hit. And so that was it for me. Decided not to trust that zone if they were to go up to it again. This is, to me, the second attempt, and that was the trade. Then at 10:35, I had a note waiting to see if the bears can establish closes below the axis level here at 660.63. If it holds, the bulls probably aren't finished. If it does not hold, we could see some fireworks below, but not willing to trade against it. So let things go. Still the axis point. As far as I was concerned, it was still the axis level at that time of the day. I had a note here, starting to think I probably won't trade today. I'll see what happens by 11 a.m. or so. Then I'll probably retire for the day. Levels are pretty spread apart. I didn't really want to wait around to see if price would get down to them. 11 a.m., I have a note here. Let me just pause this. What did I say at 11? Basically asked the question, are the bears trying to assert dominance below the axis? There could be a zone down between 658.10 to 657.50, maybe lower, that the bulls could play defense, kind of their last line in the sand. Bottom of that triangle range. I had this question, should I tempt fate and try to go long for a few points? If price gets down to that zone, we will see. 11:10 a.m., I said back up to the axis level. They're fighting it again. Too much back and forth for me today. Making the decision to not get into any trades today. 11:30 is my cutoff anyway. So I let it go to 11:30 and pretty much done for the week. So I'll just move ahead here to when I closed up shop, 11:30. So no trades for me and no official trades playing by the rules. But as you've probably picked up already, these zones that kind of bookended this axis level were important. In retrospect, I probably should have just trusted my instinct and traded them. We'll just jump back to the 1 minute chart with these zones plotted just so you can see what they look like. So these levels up here, the 662, 63 range, this is where I was willing to go short, cancel that order. You saw it. And when they came down here, that was really the money spot here. Well, how low did they get? They got down to 658.14. That's 4 cents away from the top of this zone, took off. Bulls defended it pretty well. And since they got on top of this axis level, at least that was important for Friday, it could mean that the bulls are gearing up for higher prices by Sunday evening, Monday morning when the market opens, but we'll see. Levels could be different. As we said in the game plan, that bearish consolidation based on last week's drop, last Friday, October 10, it's still valid unless they can get above it and close daily candles above it. So it's a long ways. A lot of range at this point before we really know what's happening. They're either going to break out or break down. Over on the logs, the play-in by the rules, one level hit, no trades per the rules. And same thing here. For me, Sam's trades, no trades taken. And you can see where this puts us in terms of all the metrics that we track. So I'm making this video at 5:30 p.m. Eastern on Sunday evening. Market opens. The Globex session opens pretty soon. There'll be some trading tonight. And we'll see what the futures can do to price. I don't really care at this point. We know we're in this big range here between the high and the low of this candle. We'll see what they can do with it for the next few days. Meanwhile, it's just a bunch of back and forth in between. And I will have levels more clearly defined to trade against in the morning per usual. So that's what I've got for Friday's recap. Thanks for watching. I hope you found this helpful. I'll talk to you again soon.